Yeah, a trader has purchased new business premises. What are examples of capital expenditure? Capital expenditures are expenses on or spending on non-current assets. So cost of heating and lighting the new premises, it's a revenue expenditure because every month you pay for heating and lighting. Cost of purchasing the new premises is a capital expenditure. Legal costs of purchasing the new premises is a capital expenditure. Office furniture adds value to the premises. Yeah. It's also capital expenditure. So 2, 3, 4 are capital expenditure. So C. Question 13 is C. Question 14. Did you get it right?
No.
They said 2 companies each purchased a motor vehicle for $10,000 at the beginning of year 1. Company G used the straight line method of depreciation at a rate of 15%, while Company H used the reducing balance method at the rate of 20%. What was the difference in depreciation charge between the 2 companies for year 2? In year 1, we have 10,000 multiplied by 15 over 100, which gives us 1,005. So for G, because it's a straight line method, it maintains the same charges on depreciation. Yeah. So year 1 is 1,005, year 2 is also 1,005.
That's 3,000.
Do you get it? So year one is 1,005 minus 10,000, which is 7,005. Year 2 is 1,005 minus 7,005. Not just 3,000, please. Year 1 is 1,005 minus 10,000. The net book value remains 7,005.
Okay.
7,005 minus 1,005 gives you 6,000 for year 2.
6,000.
Yes.
Oh, 10,000 minus 1,500, right?
Yes, that's 8,005, sorry. That's 8,005.
Yeah, that means 7,000, yeah.
Yeah, 8,005, yes. 8,005.
Minus 1,500.
That's 7,000, yeah, thank you. That's 7,000.
Yeah.
So for, what's the other girl? Or the, for G, it's 20% in year 1, which is 20 over 100 multiplied by 10,000, which is 8,000.
Yeah.
So the difference is 500 for year 1. So year 1 for G and H is 500. Do you get it? And year 2, 20% of 8,000 is 1,600. 1,600 minus 8,000 is 6,400. Yeah. So the difference in year 2 is 600. Do you get it? 6,004 minus 700, 7,000 is 600. So 500 minus 600 means that H is having 100 more than G. Do you get it? Do you understand or not?
Yes.
All right. So 7,000 in year for year 1, G has more.
Yeah.
Which is 500. In year 2, there's 600. So 600 and 500 gives us 100. Is it clear?
Yes.
So that was for question 14. Question, which is B.
Yeah.
Question 15. At the end of the financial year, we had prepaid rent of 1,500. How should she record this? A prepayment is a credit. You credit the rent account and it will become, because it's a prepayment, the rent account will be credited at this point in time, but you have a debit balance going forward for the next financial year.
Yeah.
Do you get it? You credit rent account.
The next year will be debit.
It will be a debit because it's prepaid. Yeah. Clear?
Yes.
Because it's an expense, you credit it first. So we'll go to
B, right? 15 is B.
15, yeah, B. Question 16. After preparing a draft financial statement at the end of the first year of trading, Lucy discovered 2 errors. Damaged inventory